Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, March 7th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Here's a look at the daily time frame of the ES. Right now, you'll see that we are showing quite a bit of strength here from the London Open straight up, approaching the previous session's highs. Again, another session here. We're inside the bullish Pima trigger zone. We're seeing a bounce back out of that zone, which is typical in an uptrending market. We have initial jobless claims coming out here very shortly. We also have Fed Chair Powell on deck yet again testifying 9 a.m. Central today. And then tomorrow, Friday, prior to the RTH Open, non-farm payrolls and unemployment rate will be the first economic data points coming out prior to the RTH Open. So right now, showing quite a bit of strength here off of a strong reversal this morning. From the morning overnight lows, this market continues to trend up, mostly sideways here. If you look at the 5100 level, a little bit of trading below it, a little bit above it, right on top of it, but at the same time still trending up as well, still maintaining that uptrending structure. In order for further strength to be seen, got to push through the 5140 level here, previous session's highs, and really get going. But we could be range bound within this range, especially within the previous 2-day range here, as the market continues to listen to Fed Chair Powell. But nice uptrending structure here, a good overall uptrend, and building some energy for what could be a continuation to the upside until proven otherwise. Now we do have a strong low here this morning. Taking out that low later in the day or later in the week could be a significant breakdown point, but until then, still holding and trading higher. Let's take a look here at the NQ. While the ES is already trading 94% of ADR, the NQ is also trading 94% of ADR. You can see right here already trading mostly a full day's range here. Very strong move off the London Open, strong low, a failure at the previous session's low, kind of a low failure there, and now approaching a potential outside day up. This market putting in some strong lows near the 17.9 level. Now again continuing to show strength inside the bullish Pima trigger zone, which has been pretty much what we've seen throughout this uptrending market. Overall, we have been mostly sideways here. This key range high right there, very important. Yesterday it was resistance. Today, coming right back into that level. That's the 18,120 level. We're at 18,140 at the moment. To push through the previous session's highs would really open up some upside here. However, again, we could be mostly range bound between the extremes of yesterday's range, from the prior pivot low here a couple of days back to yesterday's high here. That could provide a boundary here on each side that keeps prices in check. So even if we do reach the previous session's high here, we'll not be surprised if we turn back in and continue to remain mostly range bound here, still in upward bias as well. Taking a look at crude oil, this one's down about 0.5% right now. This one had a strong rejection off of the high yesterday. It had another really bullish attempt up over 3% at one point in the day, but fell just shy of the previous week's high price and turned right back down. It was a strong turnaround here to end the day, and it closed below the previous, or that day's midpoint here. So again, another attempt at prices above 80 and another crash and burn. Was not able to get a full-on breakout and continuation. So this market continues to be held down there. It is continuing to find some semblance of trade and acceptance above 79s. 79 had been a level where this market just wanted nothing to do with, and now it's traded multiple days at and above 79 and even above 80, but still lacking the juice to really get an upside breakout attempt. Still uptrending here overall. Still range bound inside day. Could continue to be mostly inside and range bound here with an upward bias. Really needs an upside push through 80. And this is what I've mentioned before. If we're going to get an upside break, it needs to be a significant transition day where we not only break through 80, but we close way north of 81 or even 82 in order to really trigger a transition phase out of this lower structure. And until then, every little push higher that barely goes beyond 80 is likely going to get back down. All right, let's take a look here at gold. Gold continues to tack on all-time highs day after day here. All-time high yesterday on a pivot high basis. Also an all-time closing high for the third day in a row. Now at a new high yet again. Big time continuation, holding completely above the previous year's high right now is today's entire range. This market continues to show extreme amount of strength here, but can it continue to push beyond this all-time key range high right here? That's going to be the big question here. We've already seen a tremendous rally from 1996.40 here, all the way to current levels of 2168s. Actually got to 2170 to this morning, 72.20. That's a massive move in one big beeline, only one bit of compression here. And after all that movement, is it going to be able to extend through the previous key range high here and really make new market structure above these highs? That's going to be the key question here. Does it have enough energy to really get going to the upside? Massive breakout from this compression here, this phase, especially on this day here. Huge 5-day run. Are we going to fail back below 2150 now? Do we see some sort of rejection here that brings us back in the range to trade between 2080 and 2150 now and fill in that empty space in the profile? That's going to be the big question here. Can it stay above 2150 or does it fail back below that level at some point? Keep an eye on that edge. Lastly, taking a look here at the YM. The YM here showing a failed new low, rejection at the previous session's low, a solid reaction here again at the London Open. Now trading through the previous session's midpoint. That's a pretty bullish move right now. Could take us up to the highs of the previous session's range, but again, we may be mostly range bound here with an upward bias until proven otherwise. The previous month's midpoint here taken out hard, and it's still holding in that area. It's not really breaking down further from that zone. We also have the 34 period PIMA here providing support. That is an indication right there to even test the 34 pivot based EMA right there. That's an indication that the trend is slowing down somewhat. To close below that level on a closing basis would be detrimental to the uptrend as well. You have your uptrending 55 providing support from below. So overall, this market continues to hang in there. Again, still kind of sideways overall. Uptrending market, but very sideways over the last 4 to 6 weeks or more. And today here again could be trading between the 38.5 and 38.9 level for the most part. That could be the range for today's session with an upward bias until proven otherwise. Now, if this morning low is taken out again at some point today or perhaps tomorrow or next week, that's going to be the low where that really opens up some downside below, especially with how strong of a pivot low that is at the 2 a.m. time frame. So again, very strong low in the ES, NQ, and the YM. Those lows right there could open up more downside ahead if taken out down the road. All right, that is it for now. We'll see how this develops the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.